who gives a damn if you got the best tech? If you got no way to build it, it doesn't matter.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots. And I am joined, as always, by the brain trust himself, Mr. Chase Taylor. So I was thinking back was about a week ago where we put on our Make Volatility Great hats again.
we did it.
Yeah, we really we did the rain dance for that, didn't we?
As it turns out.
A couple rainmakers for that. Let's before we get into a broader discussion, let's do a rundown on the indexes. It was kind of ugly.
Yeah, S&P closed down 1.12. The Q's down 1.86, which that's genuinely ugly. Small caps down almost 1.8. Equal weight down 0.7. Mag 7 down over 2%. XUS was down 0.46, so pretty decent outperformance given everything. Dollar down almost 0.5%. So dollar basically unwound yesterday's jump. I think it's because we got some bad data we can talk about. Oil down a little bit, gas up some.
Wait, where dollar was up today? They were down.
No, down almost 0.5%. So it almost mirror imaged yesterday's move higher. So you basically jumped on the tariff stuff and then you gapped down. I think largely based on the job cuts data that came out this morning. That looked somewhat concerning for sure. Let's see what else. Gold essentially flat, silver down a tiny bit. Same thing for yields. Yields is the dollar. Yields were basically up 7 basis points yesterday, down 7 basis points today. So we just did a weird, just mirror image on all that stuff. As far as who got hit today, our focus has kind of been lately, just because the AI stuff's wobbled, Oracle, Meta, both of those down about 2.6% on the day. You had NVIDIA down over 3.5%. Less of a pure AI play, but Palantir down over 6, almost 7% on the day. So continuing to bleed out of the AI space. And the bad data at least messed with some of the macro stuff a little bit.
Most importantly, we'll just do this real time. What do you think of that Palantir now that we broke that 186 level to the downside?
Yeah, I mean, it's interesting. You have a few charts starting to look, so somewhat suspect, and like they could keep moving to the downside. So I think Palantir is one of them. There was a horizontal level. Almost everything had a horizontal level that was like a ceiling, and then you got above it. So often those become a floor where that old resistance becomes new support. So there's one of those on Palantir, just like there is on the indices, and that gave way today. So now you're getting close to an uptrend line, same as you are in the S&P. So at that uptrend line and close to 50-day moving averages on a lot of different stuff becomes sort of the key on the short term. Do you bounce off that and you're good, or do you break below? And I think one thing to keep in mind, we're starting to get some pretty legit downside on AI stuff now that they're seeing how much debt they could sell. But I think we all know we're one really cool AI model away from all this stuff being back up to new all-time highs, right? If OpenAI comes out tomorrow, oh man, check out this new thing that we did with AI, and everyone's be like, oh, I need to buy all that back. Mm-hmm. So we'll see. Who knows? But now you're clearly getting to the point where there's competition between cool AI stuff, because I'm sure they'll keep coming out with cool stuff, right? And how much it costs, and the fact that they're selling a bunch of debt to get there.
Yeah. The other thing I think is interesting about that story, and something I think that is changing, and I think it's just an observation, changing real time, in the narrative surrounding that whole AI deal is at least it seems to me that that the cart has gotten in front of the horse a bit here in many different ways, but it also seems like some folks in the industry are, I'll notice this the other day. You and I talked about it, so it's not news to you.
And more happened since we talked about it.
Yes. And Amazon selling the stake in AMD that they bought not that long ago. That was like 3 months ago, wasn't it? 2 months ago.
I don't know. I couldn't even tell you.
Pretty recently.
Yeah.
So like we've told you, if past is prologue, usually the climax of moves like this is usually one of the hallmarks that you see at bubble tops, if that is indeed what this is. You see fraudulent stuff, Ponzi-like finance, things like this, the circular finance, all that. And then the next step along that is those financings starting to unwind. You know, people starting to pull their chips off the table and going, wait a second, this is a little extended. I'm not at all calling a top. And like we've said 100 times, it's a fool's errand.
But this is the first time it feels like you've had, other than DeepSeek, it's the first time it feels like there's been like a real headwind in this space.
It feels like you've overrun. It feels like there are a lot of people that are, it feels like there are a lot of investors and a lot of portfolios out there that are looking around going, this feels really stretched. We better take some profits here. And
we talked about how it's like sort of weird to have Sam Altman get defensive and stuff. And there was another thing. I can't remember what it was now. That
it was
like,
CARP for Palantir.
Right, yeah. So another one happened with...
He was calling it market manipulation,
know, yeah.
And his stock's trading at 120 times
like
revenue.
Almost none of the floats short, but...
Good Lord.
Another one came out. Now, they've tried to put the toothpaste back in the tube on this one, but the OpenAI CFO basically came out and called for a government backstop on all their infrastructure spending. So what you're talking like, $1 trillion of spending. She tried to explain it away. Sam Altman had to go and put a post up saying, well, we don't want a government bailout. We don't want government backstop. But again, it's just another one of these little things is like everything is going great for these people on the surface, but yet there's like this weird churn of desperation underneath and stress. Clearly, it's just,
well, the other thing,
are they struggling to raise money and we don't know it yet?
That wouldn't surprise me if that was the case, because
it's not $2 billion these kind of people need. Right?
No, that's the problem. Yeah. And you don't, it's getting to the point where, at spending levels like this, you could even see a guy like Masayoshi's son like pull back on it. You know what I mean?
Yeah. I mean, Masa doesn't have $1 trillion in his pocket, right? Nobody does. Like, it's not how this works.
And then not to mention that, but you don't have to be a very sophisticated investor to ask the question, wait a second, if this is the investment, how do we get paid back? And it seems to me that a lot of structure of these quote unquote, let's give them the benefit of the doubt, these creative financings. And I'm not an expert in this, and I haven't spent a lot of time looking at it because it's not what we're focused on right now. It's not where we see the greatest opportunity. But it seems to me that a lot of the internal value and a lot of the backstop of these financings is the value of the underlying equity itself. Right? Like it's like a cross equity orgy almost. Like the underpinning value of all these deals is the belief that the equity underlying of both firms is going to continue to rise in value. If you strip away rise, and again, I haven't gone through the deals in detail to know if this is a fact, but just from an illusory glance at those deals, it looks to me like one of the key things that these things hinge on is the equity prices continuing to rise. And any time you've ever seen financing that relies on the underlying assets or the underlying, risk assets rising into perpetuity, that not only does it never work, but it usually says that you're toward the end of the,
right.
Because you got to keep pushing out further on the dream highway. Where's the last stop on the dream highway? It's the belief that equity prices are going to rise into perpetuity.
Yeah. And at the end of the day, there's like a lot of greater fool in this, at least short term, right? So,
yeah.
But it's interesting because I think we're all used to the greater fool being, some retail donkey or like, putting it in your great aunt's, IRA or whatever, like we're gonna do, obviously. But in this case, like that's not necessarily it either. Maybe it's more of a, if the guys in Silicon Valley stop writing huge checks, like they're like sort of the greater fool at the moment. Now, obviously, that's why they're trying to offload some of that stuff to your great aunt. But like, I think the biggest problem is the big numbers. Like the deep pockets this requires is insane.
Here's the other problem, and you brought this up, and I think you made a really good point, but it keeps sticking to my head, and one of the biggest mistakes you can make in any aspect of the world, whether we're talking about finance, whether we're talking about trade, investing, or even military engagements, it's the assumption that your counterparty's an idiot, right? And I never want to assume that's cost me a lot of money in the past, writing things off.
Yeah, and the people we're talking about that are on the other side of this are some of the smartest people on earth, like full stop.
Yes. Yep. And if you're not looking over your shoulder and keeping your head on a swivel in that environment, if you're pushing against that idea, I would suggest a good amount of caution.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
That being said, the numbers have gotten so big and the rush in the US is so intense that the part of this circle that I'm having a really tough time squaring is to assume we're doing the right thing. Meaning that we're making the right investments, isn't that simultaneously assuming that China's a bunch of idiots because they're not doing it?
Yeah, they're making a different bet, and that's, I'm glad you highlighted that. It's very important, and
a lot of smart people over there, man.
I'm doing a very, very deep dive on the bet they're making that's different than ours, how it's different, why it's different right now, and when you go deep on that stuff, at least in my opinion, it's kind of clear that they're at least making a better risk-adjusted bet. Now, maybe we're right and we create, this AI digital god, but if we don't, then, they're especially going to take our lunch money. They might take our lunch money either way, but
the other interesting thing I've been reading over the last couple of days, and it's actually surprised me, and I'm hoping that you and I haven't had a chance to talk about it, so maybe you know more about it than I do. We all know what the upside case is for AI and the stories about how great and impactful it can be. That being said, one of the things that we're starting to see in a lot of these LLMs is that they seem to be regressing. That the quality of the answers, the accuracy of the answers is falling over time. It's not getting better. And you're seeing this with many of them, if not most of them. What is that all about? And what is that? What is that?
I don't know.
At?
I'm not going to pretend like I have a great answer here. I have two thoughts, though. One is, if you think about the content, at the end of the day, what the thing does is study the internet and give you output, right? But the more AI slop content that we have on the internet, the more it's pulling from slop. So, though I think I used the phrase the other day, it's like sort of eating its own vomit. Like, it's not a great output. I think that's part of it. But I think the other part is like, because it's so expensive.
The Ouroboros. That's what it was.
Right.
I was thinking about that the other day.
I think another part though is like, because this stuff's so expensive, they are trying to throttle it to keep it cheaper. And part of that, I think, is like, if you're not, if you unplug a lot of the cool stuff to try and save money, like you end up with worse. And the crazy thing to me is it's very volatile day to day. There are days where, like, especially for image generation, I'll notice there's days where it's just awesome. And like, I'll put in a prompt and I'm like, yes,
dude.
Like, and then there's another day where it basically draws me a stick figure. And I'm just like, what are you doing?
I had that experience in the last 2 days with Grok. I asked it something 3 days ago and it was freaking awesome. I asked it the same question this morning and I had kept re-entering the question because I was like, this isn't what you gave me the other day. Right. I want to see the stuff you gave me the other day. It was more cleverly put together. It was funnier. It was the syntax was better. I mean, everything about it was better. And I put in the exact same question and got a completely different result. The thing I came away with is this, and I think it's something that we have to be mindful of. You and I have been talking about, and it's something that you typically see universally around new emergent technologies. It's not that they're not going to work or this or that. It almost, and as a matter of fact, I'm trying to think of something that maybe the only thing I can think of, and it still had its slow development parts, but the only thing I can think of that at least exceeded my own expectations about the speed in which it proliferated was social media. Pretty much every other type of new emergent technology, there's always trips. There's always pitfalls that nobody saw coming. There's always delays. This stuff almost never, emerges and comes together faster than you think. When you think about the intricacies about this technology, for instance, in many ways, we've created technology for the first time where it's doing things and we don't know why.
Yeah.
Do you know what I mean? Like, that's a huge thing in and of itself, right? So to act like we know how this is going to play out and integrate into the economy, and more importantly, to assign best case scenarios to all of it, not only do I think it's not likely to play out, I don't have any real world examples of this type of emergent technology playing out that way. It just never does, right?
Yeah. I mean, I think in new technology bubbles, you see this though, where like the only thing that gets priced is the best case.
Yeah.
You go back to the UK and the railroad stocks in the 19th century. I mean, they were all going to work, and none of it was excess capacity, none of it was too much spending. Like, it was all a big winner, because this is going to change everything. And obviously having railroads all over did change everything, but
someone broke.
They spent too much and they built too much. But like, to your point, and like we're talking about, this week, like, the railroad doesn't depreciate the way these do. And that was like actually one of the arguments that the OpenAI CFO made, was like, we're still trying to figure out how long these chips depreciate. Like, is it 5 years? Is it 12 years? Like, and because her argument was like, because we don't know
the pace of innovation,
we need a backstop. And it's, well, maybe if you don't know, you shouldn't buy it, but
well, and that's the thing that concerns me about the comp between us and China, which, like I said, to believe we're doing it right simultaneously is to believe that they're doing everything wrong. We just don't have evidence of that. I mean, DeepSeek made some really big advancements. We know that they've got some serious players over there. And then more importantly, it's really hard for me not to look at the last 15 years of our market returns versus theirs. I just, 15 years of winning and building the most profitable, most successful companies in the world, and a net worth north of $100 billion. A lot less winning than that has led people to make really foolish decisions.
Yeah, I think that's where we're at, because we're all in on designing stuff, and we're all in on software, and they're all in on making stuff. The problem with this, and I'm writing about this in this big monthly I'm working on, is we think you can separate design and manufacturing completely, and I don't just mean we design it here and they manufacture it in China, because obviously that's the last 20 years in a nutshell. But we even do it in the States, where like you may have a manufacturing facility, but then the engineer is, in their nice gated community in a nice city away from the plant where they're building it, thinking they can just design it without being on the floor, watching the iterations and watching how it doesn't work correctly with this other piece that this other engineer dealt with. Whereas, when you're in China, one of the beauties and the reason that they're having so much success is like they're all there. They're all in the same spot. The design team is with the manufacturing team. They're going back and forth. They're learning from each other. And like we have lost that to a degree, because we just think like, oh, we'll just design it, and yeah, you guys figure out the other stuff. Like, but we'll just tell you how to do it. And the reality is like that's in like an emergent ecosystem and not just a top down like thing. And we're seeing like all these flywheels spin off where they're taking off with cool products. And the trope of like they can't innovate is still alive and well. Everyone believes like, oh yeah, well, they can't invent anything, only we do that. I'm like, okay, well, the BYD Blade battery we did not invent, they did, and it is awesome and it's better than our stuff. And they did that because of that intersection of design and manufacturing, and coming up with new ways to do things, iterating in ways that we in a lot of ways stopped. And I think that's a theme that will get a lot of traction in the future. But for now, I don't think anyone's thinking of it that way.
Yeah, I can't help but to think that, well, I think it's as easy as just a simple observation, meaning I think a big part of this CapEx cycle is just the fact that everything Silicon Valley's thrown money at for the last 15 years is paid.
Yeah, and it's had huge margins because software has no expense hardly. It scales with, infinitely. But
this isn't software. Like
right. That's the point. Is like I think we thought everything that would matter would just be software.
Yeah.
I think anyone that's paying attention today is realizing like hardware is actually pretty important for where we're going. Like,
well, and what I also meant too is that of course LLMs are software, but they're not. Like
the hardware behind them is pretty insane.
Yeah, it's
and at least we are good at that stuff. But
yeah, and it's just a completely different animal. The old adage of Bill Gates, software is going to eat the world. I think AI is going to eat software, or maybe, a lot of it.
But I think smart hardware is going to eat everything. I think cheap electricity will determine the future. You know what I mean?
Yeah. Well, and of course, especially when you look at the cost structure of running these data centers and how big how big power is going to weigh into all that. But the other side of it is just simply observation. It's something that you and I have talked about a long time. And it's something that I look back to the 90s in this country. And I remember when this debate was happening, you and I have talked about it before, NAFTA, 92, 94, that area. And, I cannot help but to look and it kind of just like that idea that China can't innovate is still alive. It is still shocking to me how few people understand the dire position that the manufacturing sector in this country is in, and how it doesn't matter what you can design, right? In times of global conflict, especially in kinetic conflicts, it's the manufacturer that wins, right? Like meaning World War II, what swung the balance? We were the greatest manufacturing power in the world that woke up.
Yep.
If we didn't have the ability to do that, we wouldn't have won.
Yep.
Right.
Full stop.
So you can
we liked freedom or something.
Right. Yeah. So great. Be the greatest designers in the world. If you can't build your own models internally, it doesn't matter.
And don't have the raw materials to make the
stuff. If you can't source the metals and the raw materials, it doesn't matter.
Yeah.
And I say what you want about Trump. I think one of the things that everybody should acknowledge that he's done right in terms of addressing it. You may disagree with ways he's done it, but I think it is the one thing, I personally think there are multiple things, but I think it is one of the things that his administration has addressed that I really wish people across the political divide would agree needed to be addressed. Maybe you disagree with the ways he's addressed it, but we must rebuild our manufacturing base, not back to where it was in the 40s and 50s, but we've got to be able to totally fuel or maybe throw in some exceptions. We've got to be able to build everything we need and at least be able to source it via North America.
Like it's like the Rush-Doshi allied scale thing, like that. To me, that's what it comes down to. You have your allies, you can trust. And at least among you have to be able to make these important things. Now, to your point of like, you can criticize the delivery. I do, because like, do we need to worry about cabinets and food and maybe not, right? But like drones, yeah, like us or some of our best friends should probably be really good at making drones. Not just making them, but securing the supply chain, making them affordably. Like,
so do you mean it's a bad idea to have people design weapons for you that you very well could possibly face in the next military conflict?
Not design, but like supply the stuff for, like magnets and stuff. Yeah, like that's probably not great, right?
Or not design, but I mean make them.
Yeah, right.
Yeah, because I mean, if you do need to take, let's say we've got a kinetic conflict with China heats up and a new front in that conflict opens up, I suppose we could just call China and tell them we need more stuff, right?
Yeah, and this is the point Luke Gromen's been making in the last few years. Like, hey, something pops off with them, like, have them make you some ships and drones. Like, or like, hey, send us some more magnets and steel and like whatever the inputs are. They'll just be like, oh, no. I mean, they already played the magnet card on us just over the trade stuff, and we instantly had to back down because it turns out those are really important for manufacturing a lot of stuff.
Yeah,
and we actually sold them the original technology that drove these magnets. It was a GM like subsidiary that went under, and they bought it for like $200 million or something.
Yeah, it's geopolitical masterclass.
The profit margin wasn't there on that, so who cares? And that's where, like, hey, like we talked all about how capitalism is better than yada 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 yesterday, and we both are free market dudes. But there are like these blind spots where like, hey, this feels like it could be important in 30 years. We talked about it with the grants and stuff. Like, support it. Make sure like you at least have strategic and potentially strategic stuff in some sort of incubator. Like, don't let it go. Like, that's important. And
we just need to, but I think it's even a step further. And I think you've said this before. Bottom line is we need to rebuild our manufacturing base in this country, and we need to do it urgently, in my opinion.
Strategic manufacturing base,
manufacturing
the things
base,
that will matter in the future.
Yes, and that needs to get going yesterday.
Right.
And we don't have time to delay on that. And
even that is a political football that brings in the tribal stuff of,
And I don't care what it takes. I mean, bottom line is there might be certain manufacturing things that in order to bring them back, you give them a complete tax holiday.
There's got to be all kinds of stuff like that.
Yes, right? But it's national security.
And most importantly, as we've been talking about the education side, like you have to incentivize people to get the right education. And
here's the other side.
If without the right people to do the work, none of it matters.
I'll throw another one at you. I think the money's there to do it already. What in the hell is $1 trillion defense spending bill if you don't have a manufacturing base? Right? Like, why do you have $1 trillion defense spending project? Honestly, cut your defense spending by 30% and dedicate that $300 billion a year to help building out and reshoring manufacturing in the United States. Because if you've got, who gives a damn if you got the best tech? If you got no way to build it, it doesn't matter.
And you can't have the best tech if you're not doing R&D. And we have not taken R&D seriously with funding, with the engineering talent, with facilities. Like, I urge people to go, just go Google image or whatever, like the Naval Research Laboratory, the Air Force Research Laboratory, and the facilities that we have not invested in this stuff.
Yeah, it's concerning. And the thing, there's plenty of different things to take Trump to task on. The thing that does concern me though is I don't hear anybody from the other side talking about this.
Well, they do, but
not in a way that we are.
I don't think that's true.
Give me a name. I'm not saying that I'm challenging.
Well, Rush Doshi was in the Biden administration, is great on this stuff.
Okay, but but what I'm saying is he's not a guy that turns public opinion. I mean, this is not a.
I don't know. I mean, he's. I disagree with that, but
here's the 18 to 29-year-old female voting bloc that is determining elections right now. I bet you 10% or less of that voting bloc knows who that guy is.
Well, I mean, they don't know almost who anyone is probably, but
that's fair enough. But anyway. So
the point I was going to make is I think the other side of the aisle is very serious about this stuff. It's just, but like it's going to be focused on EVs and renewables and stuff, and that's very important too. Don't get me wrong, like that is very important. But they're going to leave out important stuff to focus on their stuff. The same way the right is going to leave out important stuff to focus on.
It's economically important, but we're not going to lose the next world war because we didn't invest enough in EVs.
So this is where I'll disagree, because think about this. This is actually a really important point. Like you have phone makers in China that all of a sudden can make EVs and they can make drones, because all of these technologies are actually really similar all of a sudden. You basically have batteries, electric motors, some sensors, and the way they talk to each other. And that's like all the important technology of the next century is actually really similar stuff. Everything's running off very similar batteries, very similar electric motors. So if you're really good at batteries and electric motors, you're not just making EVs. Those people...
No, it leads to other things. I understand.
Right.
I understand.
That's why they're smoking us in things like drones and robots.
Yes.
Because they're way better at things like EVs.
Well, I know. Okay, but the other thing too is you got to consider... malinvestment is potentially good investment once it
China's poster child for this.
Once it turns the corner.
Looks like they blew a lot of money in the last 30 years. It turns out a lot of these areas they did not.
Yes. Now, but if you look at our ability to invest internally, right? Like for instance, the progress they're making in EVs and drones and things like that, at this moment right now, that's not what worries me, because I think that we have the capability. If we went after that market with the same veracity or intensity that we're going after AI, whatever gap exists between us and China, I have a firm belief that U.S. innovation, if it was prioritized like that, could catch up a lot quicker than most people think. And that's not a knock on China. It's not me. What I'm saying is I believe when we are running at full speed, at the very least, we are still very competitive with China when we are focused and running in terms of innovation. Manufacturing, we're clearly not. And that's what I was saying.
Actually, yep.
We need to differentiate that. What I'm saying is I don't think that they've got a lead that we can't overcome in those things.
Well, look how far they came in the last 20 years against us. I mean,
right.
It's just about
priorities. It's about prioritization, right? Sitting there going, what are the priorities? And my whole point was saying, I don't think that issue exists now, but if they get a significantly bigger lead in things like EVs and drones, you could get to a point where it is significantly meaningful. My whole point was saying, I don't think that ship has sailed. I think that if we make those adjustments and reprioritize really quickly, the manufacturing side of it scares me more, just because now you're talking about then having to build real things, right? And building real things costs more money, takes more time. It's just
it's hard.
Reshoring manufacturing ain't easy, and it's expensive, and it's arduous, and when I'm looking at it, some of those other areas concern me. I just think that restoring that manufacturing base is of the utmost importance.
Yeah, especially on this, like high tech future stuff. Like, it's. I'm not gonna say existential, but it's incredibly consequential. You got anything else to add?
No. All right, that does it for me. All right, you guys. Well, hey, as always, catch us on social media, on X, Twitter, at KYR Radio is me, at Pinecone Macro is Chase. Catch video content on YouTube. Just search Know Your Risk Podcast. Go to knowyourriskpodcast.com. You guys know the drill. Have a wonderful evening. We will see you again tomorrow. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.